Let's start off with this local currency. We're sitting at around 696. No real movement. In fact, we're flat. Euro dollar also on the flat line. We saw a dramatic spike coming through for the yen. A lot of concern about what the Fed is going to be doing. Is that going to be the main driver for most currency markets and perhaps equity markets as well this week?
Hi, Eleni. Yeah, I think it's a big week in general. Not only do we have the Fed, but we also have unemployment data later on in the week coming out of the US. But all eyes on the Fed immediately. I think QE2, as it's euphemistically being called, is a done deal. What we don't know is the amount that they're going to pump into the system. I think priced in right now is about $1 trillion. That gives us about $150 billion a month going forward. The real concern for the US, of course, is unemployment and the potential for deflation. So we are seeing the US yields coming off as that QE2 is priced in once again, and all eyes on the Fed in the next couple of days.
You said in terms of what's being priced in, we're looking at $1 trillion and you're saying $150 billion pumped in on a monthly basis. It seems the Fed was sort of testing waters last week to try and find out what most people were expecting. And we also had a very interesting Wall Street Journal report as well, saying that it's not going to be as aggressive as many would have hoped. They were only talking about $200 billion being pumped into the market. If the Fed does disappoint and not pump in $1 trillion, what does that spell then for the currency market and equity markets?
Yeah, I think a substantially lower number than 1 trillion will certainly have implications for the US bond market. And we, if the number is reduced substantially, we do expect US bonds to tick up quite heavily. And of course, that will have implications for currencies and markets right across the world, because there is so much priced in at this point in time. If we do see US yields spiking in the 10-year area towards 270, 275, then we will see a resumption of the recent weakness in the rand, and that's something that one has to bear in mind.
Well, looking at the local currency, 696, we had some strong comments out during the medium-term budget policy statement. Of course, a way forward for the local currency. We did weaken to above 7 rand to the dollar. We're now below that once again. Of course, we had positive PMI number out of China today, showing that the manufacturing sector rose by 54.7 in October from 53.8 in September. And it seems that most are really concerned about the growth scenarios that are going to play out in Asia. Isn't that going to have more of an impact on the local currency going forward than quantitative easing in the US?
Well, China is certainly on the radar. We have seen the yuan strengthening over time as the Chinese authorities have allowed that to happen over the last couple of months. The last few days, however, they've kind of put a break on that. And of course, the level of the yuan is very, very important to global markets right across the world. So China is on the radar. QE2 is on the radar. Unemployment is on the radar. All of these factors, of course, building into risk appetite or risk mitigation. The big issue for the US, of course, is the economy does look to be recovering slightly, but unemployment remains high, and that's what's concerning the Fed at this point in time. As far as the Chinese are concerned, their economy, in fact, they raised rates recently to stave for overheating of the economy. So it's a combination of those factors that are going to drive sentiment towards currency markets in the future. We do expect QE to come in as expected. We do expect the yuan over time to continue to strengthen. And on the back of that, we do expect the rand to benefit.
Dave, how are you playing the currency markets today ahead of the second round of quantitative easing?
Yeah, it's very, very quiet today, Eleni. What we have seen is slight import demand picking up, as opposed to last week where we had very, very good export supply. We're playing it very, very small at this point in time. We're looking forward into the week, into the event risk that is taking place, on the back of the Fed announcement and on the back of the unemployment numbers that will come out. But right now we have a favorable view for the rand, particularly against the dollar, perhaps not so against the crosses. We have seen the rand weaken against the likes of the euro in the last couple of sessions, and I think that trend is set to continue.
Just looking at the yen, I mentioned a little earlier that we saw it spiking aggressively against the US dollar, and it's interesting that the Bank of Japan has brought forward their meeting, so obviously wanting to respond to the quantitative easing, or the next round of quantitative easing that the Fed is going to be embarking on. What about those crosses? I mean, everyone's still talking about intervention. It's also interesting to note that all of this is happening in the backdrop of the G20 pledging to ensure that they're not going to be depreciating their currencies, and also the local governments and the local authorities here are talking about ways to try and mitigate the rand's appreciation. So an interesting play at hand right now, David.
Yeah, a bit of a minefield for local authorities. I mean, I don't think you'll find anybody that would suggest that the rand is overvalued at this point. And certainly from a policy point of view, the authorities are looking for a weaker rand. But, there's very limited ways to do that. Interventionists, they continue to build reserves, and they bought quite a substantial amount of dollars over the years. But also, one has to look at the rand as far as on a trade-weighted basis, and that hasn't done so well over the last few weeks and months. Coming to the yen, Eleni, I continue to be surprised at the price action in the yen, because really that's the economy that's been in the doldrums for the longest, for decades now. But the Japanese do continue to export quite strongly. Those flows are flowing through into their currency markets, and that's why we've seen the yen do what it has done. And of course, one of the issues is if intervention takes place, that's quite aggressive, and the yen does tend to move quite sharply on the back of that. But for now, given the G20 statement, I think authorities across the world really have to let markets decide where the currencies are.